Yes, welcome back to Trade Like Skills channel. In today's video, we are going to look at reversal trading or reversal trading strategy. Like many of you don't know about reversal trading and you trade badly and you end up hitting stop losses. So reversal trading is the turnaround of the market trend or when the market is changing the trend. And it happens when the price of an asset moves in the opposite direction from its current trend. After changing direction, the trend continues for a while. So, first of all, the first thing is to identify where the market is ending the trend from. Either there is a higher time frame order block somewhere, because the market has been in a downtrend, that the market has been maybe dropping from higher highs, breaking lower lows. Let's say this way, like this. So the market has been trending in a downtrend, and then the market reaches a time when the market can't trade in lower lows anymore, breaking lower lows, and then the market starts higher highs, changing the direction into an uptrend. So in this market, we are talking about the reversal trading. Of course, reversal trading is when the market turns around from its main trend that it has been in to another new trend. So where do we catch the trade from? We catch the trade from here down below. Altogether, this is where we catch the trade from, and then we drive the whole move to the upper side if we are to buy in an uptrend. So if you want to do also continuations, you can be adding more entries on these pullbacks where the market is just retesting, and then you do entries. But reversal entries are just taken from the initial start of the trend, from these zones. You see this zone? So if you are taking a trade from here and then you are targeting the higher high, of course you will take the whole of this. And this is mostly and mainly done by swing traders who want to hold for long, and you want to hold the trend that is moving. Or it might be on a higher time frame when maybe, let's say, the market has been in a downtrend, in an uptrend, and the market is just retesting. Let's say this has been a bigger move to the upper side, and then the market is just retesting, creating an internal trend or internal downtrend, and then you are catching a move from here. And then you have to wait for the market to show you that it's going to change the direction, and then you take an entry from here. If you are having all the requirements that are needed, all the confirmations, and then you take a trade and then you target the recent high. So that's what I can talk about. If the market has been in an uptrend and then you are waiting for another block that has been here, to those ones who know about order blocks, you just tap into this zone and then you wait for the market to come into this zone, and then changes character or shows you any movement or any need to change the direction, and then you take the whole move. But this is done on higher time frames, waiting on the lower time frame. So if the market comes into this zone, of course you'll be waiting for the market to change character or to show you that it's changing the direction. But before we go too far, before I show you the real examples on how to take those entries, you can check the link in the description or in the bio, and then you join our community. We have a Telegram community where we do live entries every day, and we do live YouTube entries or YouTube signals, and then you can take entries with us and then make money daily. So coming back to this, you can check this. You can see that we are having this market that was in a downtrend. This is a 15 minutes chart, and the market was just dropping down from the higher zones to the down zone. So this is a downtrend, breaking structures to the lower lows. So which means we are waiting for the market to show anything that the market is going to change the direction. So we can see well that the market came here, and then instead of dropping to break the lower low, it tapped into this zone because we had imbalance and order block. So to those who knows that, and if you want to learn more about those things, you can join my mentorship and then start learning, and you develop a strategy that is going to help you out and you make it in trading. So as you can see this, the market had to break this high. So after the market broke this high, mainly the market has changed the direction, or the market has changed its structure, showing us that there is a need of continuing to the higher highs. This will be a change of character. So in this market, we are only looking at the zones where the market can come and mitigate, or market can come and then retest and then continue higher highs, so that we can take entries from those zones. Now, I want you to look at any order block that is near there, where the market will come. So when the market broke this zone, there was a newly formed order block here, and we had imbalance, though there were zones that were not mitigated yet, but this was a newly formed zone, and showing that the market is having too much power in going to the higher zones. So you might mark this zone because it is having all the confirmations. So if you want to learn about these confirmations, I told you to check the link down in the description or in my bio, and then you join my classes and then you start learning. So this will be our buy zone, and then we are going to look for the whole trend up to the upper side. So if you put your zone or your pending orders here, you will wait for the market to come into that zone, and then you take a buy entry, because now we are changing the direction from the lower zone of the from the downtrend to uptrend. So here I'll set my long position, and then I'll put my stop loss just near here, so that I'm minimizing on my losses. So if I'm taking as an entry from here, of course, I'll wait for the market to come into this zone. Of course, if I can't put pending orders, I'll just wait for the market to come into the zone, and then I take an entry. Or else I will wait for the market to come into the market, or I set the pending orders, and then the market comes automatically and taps into my zone and then continues high. So this is the zone that we set, and then the market came into this zone. So if you can set the zone, of course, sometimes you may set and say, I'm setting it from here, from the start of the order block, and then you minimize your losses. Or else you may put it in the mid of the zone. So sometimes you will miss out, and sometimes the market will respond to your zone. So I think you can see what the market did. The market just continued after sweeping this liquidity and then went up. And I think you can see after the market changed changed character, or changed the direction, of course, you can see that the market had shown you that it is no longer breaking lower lows by here, and it broke this internal high. So we could just confirm after this move broke this high that now we are changing the direction, because you may take a buy trade somewhere here when the market is just coming to tap here to sweep all the liquidity here and continues lower low, which won't be a good confirmation. So that's how we trade reversal entries, because we wait for the market to show us that the trend is ending. And how do we see that the trend is ending? It's when we see that the trend is no longer breaking to that direction that it has been trending to, or it has been breaking to. So that's when we can take an entry for a buy entry if we have ended the downtrend and we are taking an uptrend. So guys, that's how we trade reversal trading, and there are more confirmations that we have to look at. So these videos on YouTube are just videos for passing through, and you just get to learn a little bit of the skill. but you have to build the whole strategy. You can't build the strategy only on YouTube. You have to get someone to mentor you. So check the link in the description and then join our community, and then you start learning, guys. You can make this.